And I personally think, I'm getting very excited, it's really heating up. The temperature is getting warm. I think Bitcoin is going to go nuts. Now, Bitcoin's unique because it's the only thing all of us can buy and benefit from. Not all of us can get fancy real estate that outperforms inflation. But all of us can get Bitcoin. That'd be my message to the first floor. But to bring it back to the point, a healthy society needs a second floor. Having no middle class is very destructive. And what ends up happening is the rich get richer and smaller. The third floor is not nearly as big as the first floor. The first floor houses like 70, 80% of the population. The first floor is the minority, the wealthy minority. And that's what we're seeing here. That's what we're seeing here. And it happens because
Jack Mallers starts off with a simple yet powerful concept. Not all money is neutral. The effects of governments printing and devaluing the dollar are not equally distributed. The cost of everyday items may increase, but rare, superior assets soar. Consider luxury equities, real estate, and of course, Bitcoin. Due to scarcity, the value of these limited supply assets increases far more quickly than that of wages or necessities. The outcome is wealthy people. Wall Street insiders and big asset holders who already own them enjoy easy wealth growth, while the majority of people find it difficult to stay up. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
The big thing that I want you guys to understand is where there's two economies, okay? And this is really the story of the wealth gap in the United States and a lot of the vitriol, anger, stress, and divide that, at least as an American, I can speak to that a lot of us are experiencing. What happens is when we're debasing the dollar, that causes inflation, and particularly in assets, and particularly in scarce, desirable assets. Meaning the real estate on the water, the real estate on the beach, the top floor of the building in Manhattan goes up more than the abundant real estate that no one really cares that much about, that doesn't have that much of a scarcity value. Same thing with gold, same thing with Bitcoin. And so what we've seen is Wall Street, or just, how would you say, asset holders, the folks that actually own scarce, desirable goods, they're getting incredibly wealthy as time goes on. People misunderstand that having interest rates, or having, Fed set rates at 4.5%, that's actually very stimulative because the United States is paying such a high bill on its interest costs, and though that money is going back into the economy. So people that own a ton of T-bills, a ton of short duration US debt, they're getting paid out a ton of money, and they're going yachting, and they're buying real estate, and they're traveling, and they're buying Bitcoin, and they're buying gold. Now, the other side of the world, or the other side of this coin, these people are struggling because if you're living paycheck to paycheck and you don't own a home yet, you don't own one Bitcoin yet, you don't own a good gold position yet, you don't own these scarce, desirable assets that you're either consuming in homes or a car, or you're saving in Bitcoin and gold. These things are inflating away from you, so they're getting harder and harder to acquire as this story plays on. And so the people that don't own these things are getting poorer every single day in purchasing power terms, in their ability to acquire these things. And the people that do own these things are getting exponentially wealthier and not necessarily doing a lot of work per se. And so this, in my opinion, causes the divide, the anger, the tension in society. The ability for someone to work so hard, sacrifice and do everything right, and still have a life that they don't feel is worth living. Now, Bitcoin's unique because it's the only thing all of us can buy and benefit from. Not all of us can get fancy real estate that outperforms inflation. But all of us can get Bitcoin. That'd be my message to the first floor. But to bring it back to the point, a healthy society needs a second floor. Having no middle class is very destructive. And what ends up happening is the rich get richer and smaller. The third floor is not nearly as big as the first floor. The first floor houses like 70, 80% of the population. The first floor is the minority, the wealthy minority. And that's what we're seeing here. That's what we're seeing here. And it happens because when your job is to export the currency, be the world reserve currency, you don't have jobs for these people. The way to get rich in America is to be a financier. Wall Street, finance, trading, hedge funds. You're not actually making real. You're not actually providing tangible things to the people around you. All of the manufacturing jobs, they're in China. Apple doesn't want to make the iPhone in Manhattan. Rent in Manhattan's $5,000 a month. Apple's margins would be crushed. Stock would go to zero. The iPhone's made in whatever, Sichuan or some place in rural China. And so when your job is to export the currency, you're also exporting jobs. You're also exporting the middle class. And you're creating a division of you either own assets and you don't. And this was such a rigged game before Bitcoin. Before Bitcoin, none of us on the first floor could own anything that the third floor owned. Nothing. Now we get Bitcoin. Bottoms up movement. Bottoms up movement. So some of the charts that were referenced, here's US consumer sentiment across the income levels. So income over 100 grand a year, it's great. Income 50 to 100 grand, not great. Income under 50 grand, even worse. And so you guys can start to see the division and the trends here. If you're making enough money, if you can afford things on the third floor, you're fine.
Governments have been using the stock market as an indication of wealth for many years. Look, markets are at record highs. Everything is great, politicians would proudly declare. However, Jack Mallers contends that this narrative is no longer credible. Even though the stock market is setting new milestones today, consumer confidence is declining. Why? Because people's purchasing power is being diminished by inflation and slow development. When groceries, rent, and gas are eating up their income, most families don't give a damn about how their retirement plan looks on paper. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Now, what I would want to add to this, obviously the data doesn't exist, is Bitcoiner sentiment. Because it doesn't matter how much money you're making, whether you're making under 50 grand, 50 to 100 grand, over 100 grand. If you found Bitcoin, you understand Bitcoin, you've lowered your time preference, you earn more money than you spend, which allows you to save. You produce more value for the world than you consume, which allows you to save, and you save it in Bitcoin, and you've lowered your time preference. I would say sentiment is through the roof. You're getting 50 to 60% CAGR every year for the last 10 years. And that's the escape. Bitcoin is that exit door, guys. It is that exit door. When you look at gold and Bitcoin, I mean, Bitcoin's vastly outperformed gold, and I think it will continue. And so when people say, is the bull market over? Jack, we've reached the top. I don't measure Bitcoin dollars as much as I do Bitcoin gold. We're still below all-time highs. We haven't even gotten started. We have not even gotten started. The party is just about to begin. Policy is to debase the dollar, inflate your way out, default through inflation. Bitcoin is the only ticket we are all sold. It's the only exit door we all can walk out of. And I personally think, I'm getting very excited, it's really heating up. The temperature is getting warm. I think Bitcoin is going to go nuts. So we are getting middle class consumer sentiment readings that are below the 2008 financial crisis, guys. So, are we in a recession? Are we in a crisis? Do we have problems? Depends who you're talking about. Bitcoiners have escaped. They found the exit door. All of you listening to this, we're on the boat, on our way out of the sinking Titanic. We have hope. We have a hard, scarce asset that nobody can take from us, that nobody can print on us. No one can dilute our share in the 21 million. Fuck that. What you're seeing is, usually, U.S. consumer confidence trended with the stock market. And what that tells you and what that shows you is there's been this kind of like myth, this misty like pitch from the U.S. government. They've been saying, look at the stock market. Stock market's all-time highs. You guys are killing it. Everyone's savings account's going up, right? Your 401k, killing it. And everyone believed that. Everyone believed that. Not anymore. That's what this chart shows. If you look at the far right, the stock market's going up. U.S. consumer confidence is going down. The system is breaking. Nobody is buying that anymore. Inflation matters too much, or stagflation matters too much. People are losing purchasing power. You cannot keep lying to them. Oh, don't worry about purchasing power or inflation? Look at your Nvidia stock. No. Gold has outperformed the stock market since the divorce of the gold standard. You're better off just holding gold than investing in any of this garbage. So this chart tells me the gig is up. U.S. consumer confidence is down despite an all-time high stock market.
Jack Mallers ends with a potent reminder of the significance of Bitcoin in the current dysfunctional banking system. The value of rare assets, such as gold, great real estate, and of course, Bitcoin, is inflated when governments devalue the dollar, he explains. While the majority, who are already living paycheck to paycheck, watch these chances become increasingly unattainable, the wealthy who already possess these assets see their fortunes grow with no effort. Anger, discontent, and dissatisfaction are fueled by this growing divide in society. Bitcoin, however, alters the rules. Bitcoin is available to everyone. Unlike a penthouse in Manhattan or oceanfront real estate in Miami, a portion of the 21 million coins that will ever be produced will be available to everyone, regardless of financial situation. As a result, it is the great equalizer, a bottom-up revolution that will allow regular people to gradually increase their wealth and safeguard their assets from inflation. Mallers also emphasizes that Bitcoin is about mentality rather than just price charts. Bitcoin users have a lower temporal preference, which means they prioritize long-term savings and development above immediate gratification. For many people stuck in the fiat system, this fosters a sense of empowerment, hope, and optimism that is lacking. He refers to Bitcoin as the exit door. The one asset that cannot be diluted, printed, or confiscated is the lifeboat from a sinking Titanic. Since Bitcoin users have chosen to leave the outdated system and enter a new one that is equitable, limited, and worldwide, the future appears bright for them. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.